Hey guys, welcome to 2020. Are we excited? New year. So in case you guys don't know, as of the beginning of 2020, the first or the second Friday of every month, I'm going to be doing a live webinar. So today we are talking about resources for reviewing your year end, your end of the year, that last quarter, some tips and tricks on moving into the new year and getting ready to file if you have a fiscal year end coming up. This post will be a little bit more specific to your actual year end being December 31st, but the year end tax planning tips will be applicable regardless of when your year end actually falls. So what we're going to do is we're going to talk about, some points and checklists to really dig into when you want to be as successful as possible with making sure that you are, number one, taking advantage of all of the resources that are available to you at your year end, but number two, also setting yourself up both in business and personally to basically move into your next fiscal year, get your budgeting under wraps and things like that. So basically what we want to talk about is how reviewing your finances on a regular basis is so necessary. It's critical to ensuring the success of your business plan. But how do you know what you should be looking for, and how often should a financial review take place? Well, it's a good idea to take a look at your where you are financially at least once per year. Going forward, executing a quarterly financial review is going to become something that allows you to stay more in tune with your money and your goals. I'm not sure, what to give your attention to, but let's look through this checklist and really see if there's things that are going to hit home with you guys. So the first one is going to be start with your credit score and your credit report. Now, this one seems a little bit interesting because, when we're business owners and we're not talking about specifically just personal finances, we may look elsewhere and not really consider what our credit score and things like that look like. Now, for me, being in a financial position, when clients come and meet with me, they're looking for advice on multiple fronts. They're looking for advice not only on their accounting and their bookkeeping, personal taxes, financial planning, but they're also looking for help in budgeting. They're looking for help and advice in securing mortgages and loans and things that are going to allow you to maybe take your business from a small business to a big business. So reviewing your credit score is actually one of those very important points to consider because there's definitely, I'm so unprofessional with my camera here. This is big budget, don't you know? So what we want to do when we're looking at our credit score, it's one of the main components that allow us to make a plan, because when your credit score is under a certain point, it is going to be more difficult for you to acquire the loans and the cash flow that's going to allow you to meet your goals. So when we get to goal planning and why setting goals and revisiting your goals on a regular basis is really important, your credit score will definitely tie into that, because where you're at and where you want to go has to be realistic, which means that if you say, hey, I want to buy a $5 million business or a building, great, that's awesome. But do you have the core components now, or can we build a financial plan that's going to allow you to get to the point where you can get yourself that loan or that asset? Well, your credit score is going to be a judge on whether or not institutions will loan you money. So that is a very important thing to consider when you're doing your financial review and your year-end planning. So reviewing your fourth quarter is about looking at what you're not only able to execute for the year coming up, but also maybe things that we did wrong or things that we need to work on as we closed out an existing year. So starting with your credit score, it's so important, and making sure that you, number one, also check different credit providers. So maybe it's Equifax, TransUnion. There's a few other ones, because your score will not be the same on all of those reporting companies books. So, you can have a 600 level score at TransUnion, but you might have a 650 at Equifax. And it comes down to, and this is not getting into a credit review, segment specifically, but it is good to know that the types of vendors that you're looking to acquire loans through are going to use different reporting programs. They're going to use different companies. Just like if you walk into car dealership A, they're going to tell you that they use this credit service. If you walk into car dealership B, they're going to tell you that they use this one. So making sure that you as the individual are making yourself as informed as possible by looking at all the given sources is something that's super important. And I think with accounting and financial matters, people forget to include their credit score. So that would be the first point that we want to look at. The second point is looking at your budget. So one thing that we think about is, we want to plan, we want to dream, we want to reach these heights, whether in business or personal, and we want to be able to get there. But sometimes we dream about what's possible a year from now, and we forget what happens on a daily basis. So one of the components that's so important on a daily basis is going to be that budget. We can focus on business and personal because you need to have both. And a lot of the times the two cross over. As a founding principle in accounting, we always tell you keep your personal over here, your business over here. They should stay separate. But in reality, there definitely will be some crossover, especially when it comes to how much you pay yourself. And that's stuff that I've done videos on before, and definitely something we'll touch on coming into the new year here as well, because every single year there's new guiding principles, rules, and laws that are going to affect the way that we make decisions, including how we pay ourselves. So when it comes to the budget, a budget is highly useful for keeping spending in check and working towards your savings goals. So during your quarterly financial review, go over your monthly spending line by line. So if you're using a software, you can sometimes run comparisons. So you want to look for expenses that have increased or decreased, or new expenses that have been added since the last quarter. One of those software tidbits that I do ask people to look at is programs like QuickBooks and programs, other financial reporting programs, but I'm going to use QuickBooks because a lot of people use it. There's actually a review feature built into those programs. So when you run under your reports, you can actually pull this period compared to last period. And you can select all the way down to, say, a day to a day, or a week to a week, or a month to a month, or a quarter to a quarter, or year to year. And that becomes really important when we're looking to say, okay, last year, this month, I did this much. This year, this month, I did this much. And making sure that the numbers that we're spending are not obscenely far off. Whoops. See, this is what happens when I make an unprofessional video. All my tech clients are going to laugh at me here. But basically what we're looking for is we're looking to make sure that as we review our finances, oh no, see, this is why I can't have nice things. You guys know my video quality will hopefully improve this year. What we want to look at is we want to look at, obviously a better camera setup first and foremost. Let's go this way. Oh no. Okay, there we go. Okay, so what we want to look at, see, this is why we do budgetary reviews, so that we can hopefully, see, Gerald's laughing at me. Well, why we do financial reviews, so we know if we can afford better camera gear. And I do actually have it, I just don't have it on me, which is a problem. See, at least, even if the video quality is not perfect, at least I'm delivering the information. Budgeting. So like I said, in software, basically one of the coolest things you can do is you can actually look at, like I said, daily, weekly, monthly, quarterly, and annual reviews, comparisons. So as long as you've been using the software for, say, a year or two, you're actually able to go in and say, okay, on January 2nd, 2019, I made this much and I spent this much. Now on January 2020, the same day, I can actually look at what I've done, and you can do it for multiple periods. So if you want to see what you did in the last 3 years or 4 years, you can actually make your software do that. So when it comes to working on your budget, what we want to work with is not only partially theoretical numbers, so we're looking at what we actually did last year versus what we want to do or where we think we should be, but those actual numbers are where we're actually tracking the trends that are happening on a daily basis in our business. So theoretical is great, but it has to be in conjunction with what's actually happening. Programs like QuickBooks actually also have a budgetary component built into them, whether you're using QuickBooks Desktop or you're using QuickBooks Online. There is basically you can put in what your projected numbers are, and then you can run it against your actuals, and then every year you put in a new budget. Traditionally, we think about this in terms of, say, nonprofits or charities or organizations like that that have budgetary restrictions. So condo associations, or again, non-for-profits or things with a board of directors where they approve a budget. Great. But this can actually translate to individual, person by person basis businesses as well, if you find that budgeting is something that is either a struggle or you've set very lofty goals for your business and you need a little bit more help, and maybe you don't have an internal budgeting department or things like that to help you out. So we want to look at that budget, and we also want to, as part of our budget, look at two very important things. The first one being your revenue, your income. My chair is squeaking like crazy, so excuse me for half a second. I'm going to switch chairs, because otherwise you guys are going to hear squeaky things for the next half hour. Okay, so we want to talk about our income. So are we making money? Are we making less or the same amount, or are we making more? If your income has increased and your expenses have gone down, that means that you have more money to apply to debt repayment or savings, which is very important. On the other hand, if your income has stayed the same, but your expenses have increased, you may need to review your spending to see if there's anything you can do to reduce or eliminate unneeded expenses. I will say this, in my experience doing accounting, the biggest thing that we find is that people will get lost in things like subscriptions. Have you ever noticed that there's like $100, $3 or $10 or $20 subscriptions that are running through your credit card? You are not the only person. And it is one of those killers of small businesses, because we're like, ooh, that's a feature that'll be great for my business. Ooh, that's a feature that'll be great for my business. And over time, we don't realize how much those amounts are adding up, and then we end up spending quite a bit more than we plan to spend. So when we're identifying our expenses, that's really important. One other component, and I will be creating a future video about this. So big components for businesses are going to be people and stuff. So we're looking at your cost of goods. When we're looking at traditionally a product-based industry or a service-based industry, there's slightly different margins. I always like to say my business clients should be aiming for about 60% of their gross revenue being applied to people and goods. If you are applying 60% of your gross revenue to people and goods, that still leaves you 40% of your revenue to play with. Now, we know that at least 10, 15, or up to 20% of the rest of that 40% is going to be applied to standalone business operating expenses. That's going to be your rent, your telephones, your utilities, your gas, your advertising, things like that. So that leaves us about 20%. 20% of that is also the amount, part of that we have to put away for taxes, and then the rest of it should be your gross profit margin. Now, some businesses will have a higher gross profit margin and some will have a lower one. So for product-based businesses, we're going to see, in theory, a little less profit margin, because we're taking our revenue and we're reinvesting it right back into our company, because we need to be able to reproduce the product that allowed us to earn revenue before. Now, with service-based industries, we're going to find that they are going to be at a higher profit margin, because you're not going to need to be reinvesting as much. That's a blanket statement that obviously doesn't apply to every business. Big components with service-based industries that may change that are whether or not you have to pay out of pocket for supplies in order to do your business. So if you're a deck builder and you are responsible for providing the stuff that allows you to do your job, then your profit margin may be slightly lower, but it also depends on your markups. So if your markups are, 30, 40, 50, 60%, well, then those numbers might be skewed. Whether you're getting wholesale prices or not will also make a difference. Your subcontractors, and whether you're a one-man operation or you carry teams or you have multiple teams, will also make a difference. But what we want to look at is that ratio of, roughly 60, 65% of our gross revenue being spent in people and stuff. This should not include you as the owner, your wage. If it does, then you need to bump up that number by an extra 10%, which drops your overall profit margin because you are taking a paycheck, which is still good. You need to get paid. But it's just going to make the accounting slightly different when it comes to the marginal calculation that we do. So the second most important part with your budget is debt repayment and management. So if you have debt, look over your current debt repayment plan. Ask yourself whether you're still on track to pay your debts off by your target deadline. And newsflash, if you don't have a target deadline, you need to make one. Because if we don't have a target deadline for when we need to be getting rid of our debts and paying them back, we're number one going to probably be, I'm throwing money at it whenever I can. Great, that's awesome. But it's going to take you longer to pay off your debt because realistically, it's not going to be the most important point because new things come up every single day, which means that if you have a target deadline and you say, okay, I've got $10,000 worth of debt, I'm going to make $1,000 a month for the next 12 months and I will pay myself out of debt. Awesome, that's great. That's what we want to strive for. So then basically what we're doing is just every quarter we're saying, hey, did we get down by the amount that we said we were going to get down by? So if it's $1,000 a month, have you paid your $3,000 down towards your debt management? If you're reducing any expenses or your income has grown, consider whether you could increase your monthly debt repayment or wipe out your balance faster. So again, having that quarterly review as opposed to an annual financial review will allow you to actually look more in tune to real-time numbers to say, hey, I have a seasonal business. For example, accounting. Well, between February, March, April, May, and June, we're at our peak season, which means that we have a little bit more cash flow. On the latter end of the year, things can be a little bit tighter because we're in our slow season. So that means that we rack up a little bit more debt in the last half of the year, and then going into the new year, into the busy season, we put a little bit more, because we have a little bit more, towards the debt repayment on stuff that happened previously, and hopefully setting ourselves up for what we know is going to come for reoccurring transactions going into our slow season at the end of this current tax season. So taking a look at your budget on a quarterly basis will help and will become one of those core foundations for doing a year-end review, for doing a final quarter review, for doing next year tax planning that sometimes tends to get overlooked. What we want to do too is we want to look at our actual financial records. So getting a head start on managing our financial records. This one is more specifically attuned to actual year end. So if you have your actual fiscal year end coming up, then something that you want to do is start organizing your financial records in that fourth quarter. If you didn't do that, then deadlines you need to know in Canada is that you have, everybody will say, okay, I've got 90 days or I've got 6 months. What's the right answer? How much time do I actually have to file taxes? So in essence, basically what you want to think about is that if you are annual GST, okay, then you have 90 days after your fiscal year end ends. So if you are a December 31st year end, your fiscal year end deadline for filing your GST, as well as the point where interest and penalties start to kick in on amounts owing for corporate tax, begins at March 31st. So you are ending 90 days after the end of December 31st. Now, if you don't owe taxes and you're not in a rush to file your taxes and you're like, hey, I'm going to wait, I'm going to get through, everybody else is being busy, I'm going to wait until say May or June to file my taxes, your late filing penalty is in 6 months. So if you owe taxes and you still wait for 6 months, you are not only going to be waiting on, you're going to have 3 months of tacked on interest and penalties, you are also going to be hit with a late filing penalty. So the answer is that you have 90 days, but you also have 6 months. But as far as our clients go, we try really hard to make sure that we're filing our clients' taxes within that 90-day time frame or less if we can help it, because our core job is to make sure that we help you avoid any interest and penalties. Sometimes it can't happen. Maybe we're traveling. Maybe we can't get the records that we need. Whatever it is, that's great. But my job is to make sure that you are informed so that you at least know what the deadlines are. So your deadlines are 90 days and 6 months. But the difference there is that interest and penalties will start accruing as of 90 days. One other big financial year-end planning checklist item that we need to talk about when it comes to financial records is that if you are a December 31st year-end, your last round of source deductions is due by January 15th. Now, for December 31st year ends, this is always a really hard one for us because if you are not on actual payroll, so you are taking owner's draws or things like that, and you're not sure if you're, going to end up with a T4 or dividends, if you are claiming dividend income and you know for sure that you're going to be claiming dividends, then January 15th is no longer a deadline that you need to worry about. But if you are unsure, or you may take a T4, or we might give you partial T4 income or split between T4s and dividends, or if this is something you're not sure about, look at last year's taxes. Did we give you just a dividend? Did we give you just a T4? If you are going to, or possibly going to, get a T4, then your source deduction deadline for 2019 would be January 15th, 2020. So that would be in 5 days from now. If you don't know, it is always something you can do to prepay. You can basically just put a little bit of money on it, because the actual deadline to file your T4s isn't until February 28th. But they expect that, unrealistically I suppose, that you have all of your ducks in a row 15 days after your year end. Well, if you've got a December 31st year end, you're probably vividly aware of the fact that that is unfortunately either an unrealistic or very tight deadline. So for clients that aren't sure, look at what was done last year. If you're not sure, call us up, say, hey, I just need an idea. This is where having software options like QuickBooks Online, or something where you can visually see your finances on a monthly basis, will be very important, because if you're bringing us an envelope of stuff once a year, we don't have any working numbers for you yet, because you may not drop those documents off until the middle of January. Well, now you've missed your January 15th deadline, and of course you're going to be upset about that, but we can't physically make those documents and those appear without the information. So something else moving forward into January of 2020, which is where we're at today, is that we as an office are trying to move away from doing annual bookkeeping for clients because of some of those tight deadlines. And January 15th is definitely one of those tight deadlines that is hard for you to adhere to if you're only giving your financial records once a year. So getting a start on organizing your financial records is something that's very important. I have a blog post up on the website called Year-End Tax Planning Tips. Some of these are going to overlap with that, as well as there are slightly different ones involved. But essentially, if you are looking for that year-end checklist of everything I need to get gathered together so that I execute and meet my 90-day deadline, that's when you send our admin office, you send our admin email and say, hey, send me the year-end checklist. We have a working document that you can basically go through and just check off the boxes and say, okay, I have provided them everything that they're going to need in order to execute that deadline in a timely manner. That's unbelievably important. What we want to do too is when we're doing our financial checklist on our year-end review in our last quarter, is we want to look at our investments and our insurances. These are two things that do get overlooked a little bit more often than we'd like. Obviously, being in an accounting profession, we're not necessarily providing insurance coverage or investment coverage for you, even though we are in a point where we can advise about those types of expenses. But what you want to do is you want to be able to predict whether there's going to be changes. So, for example, if you are a December 31st year end, starting in October, November, we should be looking at investments that are held either personally or by the business, so we can forecast if there's going to be capital gains or capital losses. This is also going to be important if we've got loss carry forwards or loss carry backs. Meaning, did we make profit last year, but now we've lost some this year? Is there something we can do to basically capitalize on a previous capital loss or carry forward a previous capital gain? And are we going to be able to offset and maybe, recollect some of the money that we paid last year, or vice versa? Did we get money back last year in anticipation of knowing that this year we were going to have money owing? Well, depending on your individual situation, that's one of those components of reviewing your final quarter of your year end and or looking into the first part of this new year, so that we can get ahead if we didn't do it last year on what we need to get under wraps, so that coming into our next fiscal year, we're more successful and we have a few more working tools that are going to allow us to make better executed financial decisions for our business. Insurance is really important because what we want to do is we want to look for gaps in our insurance. So has something in our situation changed? Are there new variables we need to introduce? Do we have new owners, shareholders, or directors? Do we need to increase errors and omissions insurance? Do we need to refresh our commercial insurance? This year, personally, we saw huge spikes in insurances. This was for our business and many of our other business clients. And if you felt the sting of an increased insurance premium, that is something that ties back into your budget. So now last year you were paying $400 for a policy that now this year is costing you, a little bit more. Well, now you need to update your budget so that you are being on top of and keeping, aware of the fact that what used to cost you this much is now costing you this much. Likewise, if there's something that got cheaper, that's great. But unfortunately, most times things get a little bit more expensive. When we talk about forecasting how much more expensive things get, in a perfect world, basic inflation is about 3%, which means that everything is going to get about 3% more expensive. I'm going to be doing a video on keeping your prices relevant. That is something where we go through and we talk about how, on an annual basis, you need to review and analyze your pricing structure to make sure that you in turn are also keeping up with annual inflation rates, because all of your suppliers and people that you deal with, chances are they are increasing their prices or their margins to adhere to new inflation rises, which means you need to be doing the same, or every dollar that you earn is technically worth a little bit less than it was the year before. I'm not going to drag into that today, but you guys can keep an eye out. I'll be creating that video in the months to come, but talking about how important that is, because if I sit down with you as a client and I say, hey, let's review what happened last year to this year and let's talk about planning for this year, when's the last time you increased your prices? Most people have not increased their prices in 2 to 3 years. You'll notice that something for us is that our flat rate system, while our base structure has not changed too much, our margins for thresholds of income has been what has changed over the years. So say at the beginning, your $150 a month packages, which would be our bronze bookkeeping packages, used to cover you from one income level to another. As inflation rises every year, we play with those thresholds so that basically the thresholds tighten up, which means that as you make more money, your prices may increase a little bit faster because everything gets a little bit more expensive. But it allows us to keep consistency in the scheduling and the leveling at which rate we give monthly pricing. So every business is going to be a little bit different, but if you really were to track individual suppliers and vendors and what your goods cost you last year versus what they're costing you this year, you will usually notice a difference. So just making sure that you're keeping yourself up with that as well. See, I said I wasn't going to go on a rant, but I went on a rant. But I do believe that it's really important that we're conscious of our pricing and making sure that we're keeping up with inflation. So next point we want to talk about is, are there changes that need to get made in our savings plans? Are there things that need to get changed in our retirement planning, our pension plans? Those are something else that, as we move into a year-to-year basis, we need to look at how much excess we had in liquid cash flow, and see if there's ways we can top up our savings accounts. I have lots of clients at this point in the year, and obviously up to and including the RSP deadline of, the first day in March is, okay, well, I know I'm going to be taking this much level of income personally. Do I need to increase my personal RRSP contributions so that I can basically mitigate my own personal tax liability come personal tax season when we file in March or April? Yes, absolutely. This may be a very viable solution for you. And it is important because not only does your contribution room get affected by your previous year's income, it also, we obviously have a deadline before, it becomes no longer relevant to the previous year and applies to the future year. So for those of you that don't know, the RSP deadline is not January to December, and most of you probably know this, but for those of you that don't, it actually runs basically from March 2nd to March 1st. So the first 60 days of the new year, the first, portion, so up to March 1st, applies to last year. So between now and March 1st, 2020, any RRSP contributions that you make will apply on your 2019 taxes, but against your 2019 income, which you're going to file in 2020, which can be a little bit confusing sometimes. But this is definitely the point where once we get those financial reporting numbers, so we're forecasting your year end, part of that 90-day deadline, if you are a December 31st year end, is definitely going to be looking at our RSP contributions personally to negate our personal tax bill. We also want to look at our liquid cash reserves. So our liquid cash reserves, in uncertain economic times, make sure that we're taken care of. So ideally, we're looking to have 1 or 2 years of, 1 or 2 years or 1 or 2 months or whatever is realistic for your business. But you want to have some kind of reserve if you're able to make sure that if something were to happen to the market, your business clients, drop off the face of the planet, whatever extenuating circumstances you're involved in, that you are being aware of taking care of yourself. So liquid savings is definitely something different than long-term savings as well, because what we want to be looking at is we want to be looking at accessibility. So if something were to change in my life today, what am I able to do to help myself immediately? What am I able to do to help myself long term? So not only do we want to have investments and savings, but we also want to have liquid cash. So if you are one of those people that likes to plan personally, then you're looking at TFSA limits, you're looking at TFSA contributions, you're looking at getting something invested that's earning you 3 or 4 or 5%, but in liquid cash form, meaning that it is more easily available to us. The other option is a high interest savings account. This changes from institution to institution, so I'm not here pointing a finger saying, hey, use this one or this one or this one. Find the one that makes sense to you, but make sure you're getting at least 3% going back to inflation, because otherwise your money is steadily worth less than it was the year before. So what we want to have is liquid cash reserves. And if you do not have amounts saved right now, then what you want to do is you want to watch your holiday spending. You want to avoid unnecessary consumer debt, and you want to revise your lifestyle if that's what it takes to make sure that you are taking care of yourself in the future. Hey Malaya, yeah, absolutely, we do help with the planning. This is definitely the time of the year while we're crunching numbers and while we are, doing bookkeeping and year-end prep, what we're also doing is doing financial planning, so personally and business. So if you're looking to meet with one of us to do personal tax planning, then it's either myself or Katie in our office. My time these days is a little bit more concentrated on the business side of things, which means Katie is my go-to and my second in command. If you guys have not had the pleasure of meeting her, she's basically me in walking, talking form, just not me. But we have the same mannerisms, the same attitude, and the same approach to taxes. And she does a good chunk of tax planning with clients in January and February, leading up to the opening of the e-file desk. Important deadlines to keep in mind. I will be putting up a post so that you guys are aware, but right now we're expecting not to be able to access CRA much between February 1st and February 24th. So this is going to be really important because it's going to bind our hands as far as being able to do authorizations to represent you to Canada Revenue. It's going to offset things to be able to look at your slips online, your RSP contribution room online. So if you are looking to do tax planning, we suggest that you try and do it in January, because every year we get locked out while the entire CRA system resets for the new tax year. It's a giant handicap in our world. It doesn't allow us to give you the services that we would normally want to be providing you. So if you've got tax planning questions, you're looking for help in that department, make sure that you're reaching out to us now so that we can try and schedule you in January so that we don't get lost in the shuffle and the restrictions that we get stuck in coming into the beginning of February. So yes, we do help with tax planning, and whether it be personal or business, that's what we're here for. It's a component of doing accounting, bookkeeping, and tax preparation for you. So yeah, basically what we're looking for, like I said, that last point is liquid cash reserves. So are we setting enough money aside so that if something happens, or the market bottoms out, the economy is unstable, that we are able to take care of ourselves at least a little bit? If our cash reserves are not where we want them to be, then making sure that as we are reviewing our goals and doing this entire financial review, that we are paying attention to our cash reserves so that next year we make sure that we're setting aside a little bit of money every month so that we can increase and get ourselves to a more stable position the following year. Absolutely, I know you definitely need both. So make sure that you give us a chat so that we can sit down and we can start doing that tax planning with you. The last one is that we definitely need to be looking at, like I said, just that review of previous expenses so that we are forecasting what we're going to be spending money on as a whole in the coming year. So what we want to do is, the better you handle your spending habits, the better you can plan your savings and make needed changes in order to save more. We accomplish this by keeping all our receipts during the year, categorizing them into a spreadsheet or a bookkeeping software by month, and then observing how much goes into each category. Many computer programs are available. We like QuickBooks. Why do we like QuickBooks or Wave Accounting is another alternative? Is because you can actually attach your bank feed directly to those programs. So you as the individual may not have the functional time every day or every week to sit down and be doing that, but it'll actually start dumping in the records on a daily basis, which means your workload for keeping on top of your financial reporting is less. You can absolutely have a program like QuickBooks or Wave Accounting. Wave is free, so for personal budgeting and accounting purposes, I suggest you go with that. Whereas if you have a business, even if it's a sole proprietorship or an incorporation, that you go with something like QuickBooks. Why? Because it's got a few more bells and whistles, and it's kind of like the grown-up version of software as opposed to, Wave Accounting would be your junior software. FreshBooks would be a junior software. Xero, people have varying opinions. I personally view it as a junior software. Why? Because it doesn't quite have all the components that are available to you in something like QuickBooks. Self-employed QuickBooks right now, and obviously if you're watching this video in the future, it may not be the same pricing, but it's 70% off QuickBooks Online right now, which means if you're looking to get something personal and you like the platform of QuickBooks Online, you could do something like the self-employed contractor version. This version, unfortunately, recently we've been struggling with QuickBooks, does not allow you to invite us. So if you would like to have us be there as advisors in your software, you either need to go into a program like Wave where you can invite us, or you need to go into the entry-level program of the full component QuickBooks. I obviously will pass those links around to over the next little while, and then as I usually see sales coming in, I'm trying to post those a little bit more often so that if you guys are looking for a good time to jump into a software like that you're getting it at an advantageous price, as it locks in a discount for the first 90 days, so the first 3 months of billing before it cycles back to the full price. So we talked about reviewing our insurance a little bit. Something on the personal side, but also a very important component for business that I want to bring to your guys' attention is estate planning documents. This is going to be things like your wills or trusts, so that as you reflect on last year's accomplishments or last year's endeavors, good, bad, and ugly, are you aware and making changes that are going to reflect what happened so that your best wanting wishes are basically seen out the way that you want. You never know whether something's going to happen to you or not. Unfortunately, we're going to get hit by a bus tomorrow. So this is my 2-minute spiel on making sure you have a will, make sure you're updating it, and or just making sure that you at least have some documentation that says, hey, this is what's important. Because what we don't want is we don't want the government in any form to be our #1 beneficiary. If the government is your #1 beneficiary, your family is going to suffer, your business is going to suffer, and basically everything is going to take longer and be uglier. Whereas if you take a couple minutes every year to refresh and review your estate planning documents, you are making sure that what's changed is current, and that if something were to happen to you today or tomorrow, that your business and your family and everything else around you is taken care of the way you want it to be taken care of. So that's kind of the big, that's a couple big ones. Now, when we want to talk about, tax season, and we want to talk about ending our businesses or starting our businesses on a high point, another big tip that I always give business owners is don't go on autopilot. It is so easy for us to step back and forget that on a daily basis we should be reviewing and updating our financial reporting documents. Like I said, a big push for us coming into 2020 is making sure that our annual clients are now changing over to either quarterly or monthly clients. Reason why is because #1, it helps us serve you better. It is my job to inconvenience you for your own good. You pay me for services to keep you accountable. So part of that is making sure that I'm able to ask you questions and get answers that are not over a year old. Now, obviously, circumstances withholding, we deal with people that are behind by several years all the time. It's okay. This is not me beating you up. This is not me condemning you. This is just saying that as we get you caught up, making sure that we get you on a more regulated plan going forward so that we don't end up in the same position we were in previously. So don't go on autopilot. It is so easy to, it is so challenging with the time of year coming out of that last quarter and into the new year, is that some business owners buckle down to optimize their results, but other people take time off because of the holiday season, and it's very important to spend time with family and reflect on things, but it also, you can't completely let your business sit on the back burner. For those of you that are current clients or future clients, you guys might have been aware that we closed for 2 weeks during Christmas to New Year's. We do this every year. We do this on purpose because, quite frankly, I always joke and tell my staff I take their souls during tax season. So I have to give them, a little bit of a break. And mentally, I need a break too. So that being said, while our doors may have been closed, we will usually sit and do internal planning and internal updating during those 2 weeks so that we're not crashing into the new year as unprepared as anybody else. So for us, that's really important. And it's something that it doesn't have to take, a ton of your time. It can be as simple as spending 2 hours, a couple of days over the course of your holidays to just be watching your bank account and making sure that your numbers are there so that you not only end off the year as strong as possible, you also future plan to make sure that you are prepared for what's coming up and what's going to hit you hard, especially if cash flow coming out of the old year and into the new year is a struggle for your business. Everybody knows that January is one of the hardest months when it comes to planning for business. Why? Because everything is tight. Everybody spends a little bit more than we want to admit on holidays, and it makes our spending and our cash flow a little bit tighter and a little bit more difficult coming into the new year. Something else I want you guys to think about is really just changing and updating and making sure that you're keeping on top of your business perspective. Staying of the financial health of your company is an important strategy to help you prepare for future growth in your company. It is essential that you spend time each quarter looking at the successes and failure of the previous quarter, identifying the things that are working and looking for ways to eliminate systems that are dragging down your profit margins. So everything that we've talked about for the beginning of this video has been really about those big, heavy hitters. So the ones that are going to make big functional differences in how we plan for our business, not only reviewing our last year, but setting ourselves up for the new year. So shining light on these trends and patterns makes it possible for you to change the negative habits so that you can eliminate bad things before the year comes to an end, or if you weren't able to execute those before the end of the year, nipping them in the bud as soon as you can in the new year. You can't do the same thing over and over and over and expect different results. That is actually the clinical definition of insanity. So if you are banging your head up against a wall and you're saying, hey, I want these things, but I can't get them, I don't understand what's going on. If we take a little bit of time and we identify our business strategies, our mentality for how we approach business, and what we do personally on a level that gets us more involved in our business, we will find that if we are doing the same thing over and over and over and over again, we are going insane. That is not productive to anybody. So when we're looking at different strategies to make our next year better, which hopefully everybody shares as a common interest, we want to make sure that we are identifying the habits that we can leave behind in the old year and not enough coffee this morning. What we don't want to take forward into the new year. So you need to keep your focus on your goals that you have for the future and find ways to implement business systems that will make it possible for you to reach those goals. Now, something else I look at, and this is something that we'll work on more throughout the year, and I mean, for you guys, so that 2020 is really my year of tax planning. We've implemented some staff changes, we've hired some new people so that I can go back to doing what I do best with you guys, which is financial planning, tax planning, goals, and that. Because realistically, while we do accounting and bookkeeping, we also do a component of coaching and things like that with you guys, if it's something that you guys are looking for, because your financial planning, your mental health, and the stability of you, the person, and you, your business, are intertwined explicitly, which means that working on you, the individual, all the time versus versus and in conjunction working on your business all the time is very important. So if you are in a rut, the best thing you can do is stop, take a minute to breathe, reevaluate what you set for goals in the previous year or the previous quarter or the previous month, and reevaluate whether those are still relevant or whether they need to be tweaked. So big things that you want to ask yourself when evaluating your goals for success are going to be things like, are you on track to reach your target sales numbers for the year? If not, why not? Is it a cash flow? Is it a budgeting? Is it a reoccurring client issue? Is it a marketing or strategic issue? What are the best activities that are bringing in more sales and revenues? Are you excelling in marketing? Do you need help in marketing? Is there a way for you to more successfully get in front of your ideal clientele? And what are you offering them as far as systems to make sure that they are continuously happy and reusing your business on an ongoing basis? What are the categories that are cutting into your profits? So remember how we talked about profit margins being roughly 60%. It is something that is so fundamentally important to you and your business that you're going through and you're watching what your profit margins are. You're looking at seasonal fluctuations in your business, and you are continuing to, identify and cut and trim and eliminate things that are no longer serving you well. What do you have as far as an effective accounting system in place to show current financial reports? So if you're one of those people that has sat there and been an annual filer, long term, we need to get that corrected so that we are focusing at least on a quarterly review, if not a monthly review. Our staff is trying to implement things that are going to make your life easier. We love suggestions, which means if there's things that we can do to serve you better, we need to know about them. What we have done internally is right now is that each client, you are assigned one bookkeeper. That bookkeeper will be your lifeline going forward, in addition to myself, as well as our other management accounting staff. What that means is that you are able to ask questions on a daily, monthly, weekly basis, and you are able to make sure that we are making sure that you are giving us the information as current and relevant as possible so that we can get on top of those monthly numbers. If you don't have time or you don't see the priority need in coming in to see us either quarterly or monthly, get yourself on a system like QuickBooks Online or Wave Accounting and connect your bank account so that at least when you're running reports, you are getting at least more daily relevant information. Even if it's not 100% complete, it is at least giving you a ballpark to work from so that you are not flying blind. Because in 2020, let's agree that our biggest business goal is to not be running blind. We cannot run successful businesses if we don't know where we are. And in this day and age, it's so easy to get yourself into a system where you can see on a daily basis. So if it is something that you guys would like to, implement into your business, give me a shout. That is my job to recommend better practices that are going to help you run your business more efficiently. So realistically, what we're looking for is what's working and what is not working. It is hard to be honest with your answers, but you need to be so that you can see the areas where you are succeeding and failing. If you're coming up short in any area of your business, that can be helpful to bring in an expert for advice, whether that be your accountant, a financial planner, a business coach. Strategic partners are going to help you with the areas that you may not have all the information for. I myself love my job. I've been an accountant for almost 10 years. I love my job. I love money and finance, but I don't know everything, which is why I have a business coach. I meet with my business coach 2 hours every single week because he offers an unbiased third-party opinion and overview of where we're, doing things good and where we're doing things bad. Incredibly important because I have an emotional connection to my own business, which makes it hard. I'm a business owner just like you guys. And I mean, I'm sure some of you guys have absolutely heard me say this. I'm not emotionally connected to your business. I appreciate so much that you guys continue to use our service, but at the end of the day, this isn't my business, it's your business, which means that you have that emotional connection, which means that some of the time when we have to make tough decisions, it's harder for us to do. So by consulting third parties that are not emotionally involved in our business, we're able to take a more abject evaluation of our business and implement services that we may not have either thought about on our own, or we criticized or we hummed and hawed about, where somebody can, look at the books and go, look, you are running an amazing business, but you gotta change this, or we gotta work on this, or here's a strategy that will help you improve this, right? Your reoccurring nightmare is, I don't have enough money, I don't have enough cash flow. That is a relevant point to every single business. You are not on a little island by yourself, okay? We are all in the same business cycle. We are all struggling with the same things, which means that the difference really does come down to, who do you have around your business as advisors so that they can help you and increase your business productivity, your cash flow, and your resources? You are the average of the 5 people you spend the most time with. So if you are business goal orientated and you are push, 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 I need to grow my business, I need to reach record markers, I need to do these things, then you need to have people around you that help you get to that place more efficiently. So the last one, just like I said, is updating those goals. So making sure that we are not only setting new goals every quarter, we're evaluating what needs to get tweaked, and we are setting SMART financial goals. On our website, we have an article called S.M.A.R.T Goals, and it is the breakdown of what SMART stands for as an acronym, right? So we're looking at specific, measurable, attainable, realistic, and timely goal planning. Those are big, big, big items. Those are not items that you can always make decisions on in one day. Those are things that you set markers for, and then you reevaluate every single month, every single day, every single week, so that you are keeping relevant, so that your specific and measurable goals are still attainable and realistic and are going to be executed in a timely manner. That for me is like, it's just huge. Like, it's just, people will forget and overlook setting SMART financial goals because they get caught up in earning revenue. I promise you that going back and looking at and taking some time to strategize and write down your goals will help you long-term earn more money, because you will have a clearer picture of what you're looking for. You will have a clearer picture of what you will and will not tolerate. You have a clearer picture of the internal, inconsistencies or consistencies that you are looking for, as far as making sure your business runs a little bit more smoothly. So I'm not going to take too much more of your time today, guys. I appreciate you guys that have tuned in and that you guys have asked questions, and thank you guys so much, because you guys listening to these videos is what allows me to keep doing what I love to do. We are definitely back after the new year. The caveat that I put on this video today is that please, 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 please be patient with tax preparers everywhere. We are slammed up against the wall already. I have worked about a 65, 70-hour week already, and I will be in for most of tomorrow working internally on documents. We come back and every single person has a brand new year, which means the first question they're asking is, can you sit down with me? Can we have an appointment? Can we strategize? Absolutely. Right now, I think I'm booking about 2 weeks in advance. That is just due to the sheer volume of you guys. And we have brought on new staff to hopefully keep us relevant and on top of those time management challenges that we internally suffer from, while trying to make sure that we're serving all of your guys' businesses as best as we can. So I want to thank you in advance for your patience and understanding. And as we move into tax season, it is going to be a hell of a year. We've got a lot of fun things planned. Like I said, coming up with more of these live videos for you guys. That is a personal commitment that I am making to you guys. So every second Friday of each month coming forward, there will be at least one live video. If I'm able to execute those faster and more consistently, I'll be updating you guys. But for right now, that's what you can expect. And most of those have been turned into events. So those are available through our Facebook page. Please go ahead, RSVP, put yourself as interested. It will allow you to be sent a reminder that tells you that we have these upcoming webinars and events. Going forward, there will be more things, again, rolling out, down the pipe, but it's a good start for getting into that refresher of what we needed to look at for our previous year, our previous quarter, and what we need to use as strategies going forward into the new year to make sure our businesses are as successful as possible. If you would like to be setting quarterly meetings with me, I'm actually looking to do that more often now. So if you are interested in setting a reoccurring quarterly touch base, whether it just be a phone call or whether it be an in-person strategizing session, send me an email. This is the time that I'm looking to book those, because as we do get more busy and more, congested going into tax season, I'm trying to make those commitments beforehand. So working with me to allow me to be able help you serve your business a little bit better. Please reach out. That's what we're here for. And if you guys have other questions and concerns, you guys can hit the message button. Jocelyn is our receptionist. She is handling most of the contact that comes in through Facebook. She's wonderful, knowledgeable, and great. And make sure, that you guys are reaching out, or through our website, or through each of the individuals that you know in our office, our emails directly, so that we can make sure that we're getting on top of your guys' questions, because my incentive is to watch you guys succeed. I have been so blessed to be in a position to get to watch all your guys' businesses grow and develop, and it's a complete honor that you guys trust me with your books. So I'm looking forward to a really fun 2020. I hope you guys are as well. And if you guys need us, you know where to find us.